Financially gifting to family members can be really rewarding. However, if done incorrectly, it can negatively affect your long-term success. Oftentimes, you may consider gifting to your children or family members due to them having big life events or maybe entering a different phase of life. But think of it like when you're on an airplane and they tell you to put your oxygen mask on first, you need to make sure you're financially sound and go through all the considerations to make sure that you're able to adequately help others. I'm Amber Knips, a wealth advisor at Sweet Financial Partners, located in Fairmont and Jackson, Minnesota. And I specialize in working with high net worth individuals as they navigate life's biggest transitions, both unexpected and expected. We believe that everyone has the right to realize that their dreams are possible and use that as our focus when we work with clients to help them plan for the future. We're starting to see a shift with our clients, and that with the Dream Architect process, they've been able to do so many wonderful experiences that were important to them that now they want to do more things for the people who are important to them. And a question I often get is, can I gift money to my children, or should I start gifting money to my children and help get it out of my estate? I had this exact conversation a few weeks ago as I have a client whose adult children are struggling. And when we get together, he had his mind made up and he had already told his children he was going to be gifting to them a pretty significant amount of money. So we talked through what the plan was and we built those different what if scenarios and what that would mean for him. And he was shocked. In his case, with the amounts he was thinking about gifting, it was going to create some sizable taxes, as he was going to be using all of his after-tax money now. So then every year moving forward, he was going to be in a really high tax bracket because he only had retirement accounts to live off of. So for him, it was a snowball effect, as he would have more Social Security to be taxed, and that would increase his tax bill as well. So instead, we worked through the numbers and we were able to create a long-term gifting strategy that allowed him to accomplish what he wanted to do, but in a more tax efficient way. So it's not necessarily saying no, but it's just being more intentional about how you go about it over time. When we talk gifting, I don't mean giving small amounts here and there. That's still great to do, but this is thinking more bigger amounts. And in this video, we'll dive into the considerations when you're thinking about making more significant gifts to your children or grandchildren. So we'll talk through 5 important things to keep in mind as you navigate that conversation. And the first and probably most important is making sure that you're prioritizing your own financial health and goals first. So even if your children are struggling with money issues, it's important to consider that you need to make sure you have your own financial house in order before you're doing any gifting. You want to make sure you're not depleting your own finances or retirement assets and then altering your long-term success. Because really the biggest thing is, in order to help other people, we need to help ourselves first. So thinking about, before making any big decisions or gifting decisions, talk to your financial advisor to get a second opinion to see, can I make those gifts without sacrificing your current lifestyle? And figure out how much you can comfortably afford to give. While you're working through determining what's important to you and exactly what your goals are, another really great resource that I encourage you to check out is a video my colleague Oliver did called Optimizing Charitable Gifting. And it goes through some really important small changes to possibly what you're currently doing and how you could save in taxes. And maybe that opens the door for even more possibilities. There's several important things to keep in mind when it comes to gifting, especially charitable gifting. So Oliver's video just scratches the surface, but it sparks the ideas that are important that you can take to your advisor and go through all the considerations, which is a great lead into the next point. Keep annual gifting limits in mind. So for tax year 2023, each individual can actually gift up to $17,000 per person, which is up from 2022, where it was $16,000 a person. So for a family of 2 parents and 2 children, you could actually give $34,000 a person, so totaling $68,000 without having to file any sort of gift tax return. So it might not be feasible to gift those amounts every year, or maybe you don't have the desire to, but it's important to keep in mind the flexibility in the event that there is a big event that you want to help gift for, maybe buying a house or a wedding. There are a couple exemptions that you can legally take advantage of as well, if you want to gift up to a little bit more. So the first would be the marital deduction. So under the current gift tax rules, you can gift as much money as you'd like to your legal spouse without having to have any effects or do anything with an estate tax. But the marital deduction, it's important to keep in mind, it only applies if your spouse is a US citizen. So another consideration too is that some education and medical expenses are also exempt from the gift tax. So there are a couple important rules here that you'd want to keep in mind and dig a little bit deeper with your advisor, but something important to keep in mind just as you go through some of those big life changes as well. So now that you know the limits, the next thing to keep in mind is gifting money to underage family members. So there's a couple different things to keep in mind here, as there are legal ways to gift money to minors. It just might take a couple extra steps in consideration. The easiest way to gift money to a minor is to give them cash, but that might not necessarily be the best way. So if it's birthday or Christmas, that's great. You want to give them a little bit here and there. But if you're looking at gifting up to the $17,000 limit, cash is likely not the best option. So if you want to gift money to a child to have long-term benefits for them, there are a number of different options that you might want to explore. The first being a custodial account, and this one's really popular. It's an investment vehicle that allows you to save in their name until they come of age. And whoever sets up the account is the custodian on the account, so you have a little bit of control when it comes to managing the investments and distributions. Once that child reaches age of majority, which varies a little bit for each state, they gain control of the account. So it can either be age 18 or age 21 for most states. Because the accounts are in the custodial account, technically in the child's name, it's important to note that the funds within that need to be used for their benefit. And another consideration with that is that any unearned income generated in the account goes towards the child's tax bracket up to a certain point. So there's some different considerations there as well, as you don't want income to be too high because it can cause some issues, but it's a really great one to investigate. Another option for gifting to minors is creating a trust fund. So this would be something that comes into play when it comes to estate planning. And there's a lot of different reasons that this may or may not make sense for you, but there's a variety of different trust funds, including a revocable trust or an irrevocable trust. So when you're looking at, well, does this make sense for me? This is a great question to have with your attorney and figure out, does this meet our needs? One of the great things about trusts is that they have a little bit more control. So if thinking about the kids getting the funds at age 18 or 21 makes you a little bit nervous, that could be a great one to investigate as well. So moving on to the next consideration is, for larger gifts, talk with a CPA. The reasoning for this is that anytime you gift over the limit of $17,000 per person, the gift giver would need to file a gift tax return. So what happens then is that the gift would count towards your lifetime gift tax exemption, which is a little over 12 million in 2022 and a little under 13 million in 2023. So it's important to note that many states also have a lifetime gift tax exemption, often at a much lower level. And Minnesota is actually one of those states. So it's important to have this conversation with your advisor to see what that might look like. It's worth noting that unless Congress changes current tax law, the estate limit will be halved in 2026. So it's possible that it could get extended. Any high net worth families concerned about that estate tax limit should consider transferring some wealth now or potentially accelerating some of that, which leads into the next consideration. Consider your gift as part of your estate plan. And one of the benefits of annual gifting is that it's a great tax efficient way to move money from one estate to another. And one big reason for having a strategy for annual gifting is that it could end up saving you long-term in taxes. And we've really started to see a big shift with our clients that they prefer to give some of those gifts now while their children can use them and potentially have bigger needs compared to down the road. Is they want to be able to see their children improve their lives now versus when they're gone. So gifting money in your lifetime rather than through your estate has many benefits, and the assets can appreciate for more time, which is good for your beneficiaries, and moving out of your estate could potentially help you as well. It is also a great opportunity to teach your children and your grandchildren how to manage wealth. So depending on your goals for your overall gifts, another great strategy to consider is utilizing Roth IRAs. And there's a couple different ways to do this. It's something that's become a lot more popular. Our clients have been asking a lot about. And the first way would be if you want to gift funds that are geared more long-term, it may make sense to consider making Roth contributions for them. And what this could do is help them create wealth in their own name. You would be limited to certain amounts and certain different restrictions on if they qualify to make Roth contributions. So it would require a little bit extra planning, but it's a great long-term strategy as it's in their name and it grows tax-free. Another option would be is maybe you utilizing Roth conversions. So what that might mean is paying the tax now, but it starts to grow tax-free and it's inherited tax-free by your family members. So there are some different restrictions on, timing and different things like that. That's really important to consider. But if you're in a lower tax bracket now than the people who will eventually inherit your estate, could be a really important, powerful tool to help pay the least amount of tax over time. Because that's ultimately what we want to do, is not pay the least amount of tax each year, but paying the least amount of tax over time. So thinking about different ways that we can help, establish wealth for more generations, which is also why another really great point in consideration is talk about your gift with the gift recipient. And while we spend time talking about gifting from the context of taxes and transferring wealth the most efficiently, there are more components to the gifting strategy. And it's important to note, why do you want to make the gift at all? And this may seem like an obvious question, but when you dig deeper to understand your motivations, it might help align your values and ultimately clarify the gift for them. So guiding them to help make the best decisions. If you want the funds to be more long-term, so that when they gift the funds, maybe they don't make a decision that ends up causing some issues as well. So for example, you might want to help a family member with a health issue, or maybe you need to help family members with ongoing housing and long-term care, or looking at setting up education funds, or transferring a family business or a family farm to the next generation. The more you understand your motivation, the more intentional you can be about making your gift and communicating with your loved ones, so you're setting that realistic expectation. So if you have expectations on how you want them to use the funds, or if you would be disappointed if they handled the funds in a certain way, it's important to communicate those. And how we facilitate that, and what we often do, is have a family meeting to begin that conversation. And it really comes down to managing expectations. So parents can share as much or as little in that conversation as they want, but it's great because everyone's on the same page. They hear the same thing at the same time, and it allows them to, have that free-flowing conversation. And often, sometimes being initiated by a non-family member like your advisor is a great way to get that conversation flowing. Gifting may seem like a simple strategy, but overall, you can see that there's many factors to consider. And your advisor can help you work through those to determine what's the best way to do this, because it can seem overwhelming. So while you're working through determining what's important to you and what your overall gifting goals are, I would highly encourage you to watch the video that my colleague Oliver did on optimizing charitable gifting. And it goes through some possible small changes that you could do that could allow you to save in taxes and allow even more flexibility to gift to the people that are most important to you.